after almost 10 years of trading and trying everything, this might be the most powerful and simple indicator you can use. In this video, we're going to reveal one of the best MACD strategies. We'll go over everything you need to know about this indicator and provide you with plenty of examples. The moving average convergence divergence, commonly known as MACD, is a straightforward yet powerful tool used by traders everywhere. It is used to identify trends and momentum in price action. This indicator may look confusing at first if you're not used to it. So let's take a look at the various components of the MACD. The MACD consists of four main elements. First, the MACD line. This line responds quickly to price changes, making it the focal point of the indicator. The MACD line is calculated by subtracting the 26-period EMA from the 12-period EMA. Then we have the signal line. This line reacts more slowly, providing a smoother appearance. The signal line is the 9-period EMA of the MACD line. Then we have the histogram. These colorful bars represent the difference between the MACD line and the signal line. These bars turn green when the MACD line crosses above the signal line, and red when the MACD line crosses below the signal line. The size of the histogram bars indicates the gap between the two. When the two lines are farther apart from each other, the histogram will grow and get bigger. And as the lines get closer, the histogram gets smaller as well. And finally, the last element of the MACD is the zero line. The zero line marks the center of the MACD indicator and provides a basis for bullish or bearish signals. Now that we've covered the basic components of MACD, let's talk about how we can use this indicator in our trading. There are several ways to do this. The first way is by trading the MACD crossover. This is pretty similar to a moving average crossover, with a few critical differences, so let's compare the two. Here we have the MACD set to its default parameters, the 12 and 26, and two exponential moving averages with the exact same settings. Both indicators show similar crossovers, but notice how the MACD provides a much earlier signal, while the moving averages happen way after the MACD has signaled, resulting in later entries, wider stops, and less precise trades. This is why I prefer the MACD for detecting momentum shifts. However, keep in mind that the MACD can generate false signals, especially in ranging markets. So we should not use this by itself in trading. The first thing I do is zoom out to a higher time frame and I look at the current market structure. Then I only take signals from the MACD that match with a higher time frame trend. This helps me avoid those false signals. If the market structure is trending up, then we should be looking for long opportunities when the MACD signal crosses upwards. A part of the MACD that I don't hear people talk enough about is the histogram, but it's really important, so let's talk about it. The slope of the histogram gives us a deeper understanding of the trend. When the market is in a strong trend, the distance between the MACD line and signal line will increase, causing the histogram to expand. The size of the histogram provides insight into the market strength. Larger bars indicate stronger momentum, while smaller bars suggest weakening momentum. You might also notice that these colors are changing on the histogram. The MACD will primarily display darker colors when the trend of the asset is expanding. But if it's losing momentum, it will start to change those bars from dark to lighter colors. Now we're going to talk about the zero line. You'll find it in the midpoint of this indicator. If you want it to be more visible on your chart, simply double-click the indicator, open up the settings. From there, go ahead and change the color, size, or other settings of the zero line. Whatever makes it clearly displayed for you. When the MACD line crosses from below to above the zero line, we consider this a bullish signal. In reverse, if it crosses from above the zero line to below, we consider this a bearish signal. Divergence is a sign of reversal. and it can help us spot trend changes. A divergence occurs when the price of an asset and the MACD are moving in opposite directions. For example, here we have a market that's created a lower low, while the MACD is showing us a higher low. This is bullish divergence, and after that occurred, we can see that the market did end up moving higher. If divergence is a new concept for you, check out our video on the channel for more info. Now that you know all the different components and uses of the MACD indicator, let's go over some examples on how you could trade using this indicator. Here we can see that the higher time frame trend is bearish, as it's consistently making a series of lower highs and lower lows. With this in mind, we should look only for shorting opportunities. Looking at the current price action, we see how this previous support area is now acting as resistance. We want to wait for the MACD and signal line to cross downwards. Here we got one final push up, with the market taking out all of these highs. And then we got a big bearish candlestick to the downside. It engulfed the previous candle and made a new lower low. Looking down at our MACD, we can also see a bearish crossover. In addition, the histogram candles are expanding. With all of this lining up, we may have a great shorting opportunity. We can look to enter a short, setting our stop loss just above our recent highs and aiming for support levels lower. I'll give you one more quick example. Over here, we have an uptrending market. Logically, we're going to be looking for long opportunities. You'll notice that the market has retraced all the way back down, and it's retested this support level. Then the MACD printed a bullish crossover. We want a little more confirmation, so wait for the market to create a new higher high first. After, we can see that it broke through our highs with a large bullish engulfing candlestick. We can wait and look to enter on a retest of these highs, simply setting our stop loss below our low and targeting our resistance higher. Lots of people sleep on the MACD, but it really is a powerful tool in any trader's tool belt. I hope that this video has given you a solid understanding of how you can use it in real trades. If you know a trader who might benefit from watching this video, please share it with them. And leave a comment below on what topics you'd like us to cover next. Make sure to subscribe to the channel for more content just like this.